What's going on, guys? Welcome on into today's stream. We are really looking right now at SPY. As we're kind of trying to go red to green. We were red deeply this morning, came back green by mid-morning and then pulled back. Now we're kind of fighting this little trend line we have right here to see if we can get back into the green on the day and maybe close there in the next hour and 20 minutes or so, coming in a little bit earlier than power hour, but we got about an hour and 20 until it closes. And we're going to see how this plays out. Talk about a couple different things, see how some of the data is, setting up, or at least some of the new, or not new, some things we were looking at last week that we wanted to kind of see how they panned out into this week. And we already have some notable moves across a couple different things. First, I want to start with is, obviously, we'll watch SPY. We'll see if it breaks that down trend and goes for a push. I think it could totally get up there, up towards, 390, maybe not today, but it could totally do that before Powell's speech and before the Fed rate hike on Wednesday. So we'll see if we maybe hit that level on SPY. But the 10-year, notable move on the 10-year today. Look at this. So we've been watching the 10-year yield. And, okay, the question mark was what's going to happen next. That's kind of been our deal, right? And we hit a new high. So the 10-year today hit a new high. This actually, if you zoom back out on this chart, the 10-year, if you were to go back out, let's let this load. You have to go back to, looks like 2011. The 10-year just hit its high. The 10-year yield just hit the highest level it's been since 2011, over 10 years. 10 years ago. That was actually back in, looks like March or April, late March, early April of 2011 was when the 10-year yield was over 3.5% last. And ever since then, it's honestly just been, it got hit hard, from that point down into 2012, 2013, it was down here, sub 1.5%, bounced up a couple times. With those couple of bounces, it didn't really get much over 3. Got over 3, then popped to 3.25, and then, now it's obviously this year we popped up to that 3.5 level. And now we've hit it. We just missed it a couple months back. If you go back on this chart, zoom it in again, I'll zoom us back in. Back in June, you just missed it. Got just shy, hit like 3.495 or 497, something like that. And then today, this morning, you popped through. So that top little blue line right here was our, prior high. Popped through that, hit up to about 3.518, so just shy of 3.52. And then came right back down. Not that it's like, massively down, but it came back down, fell back under level. So it's kind of, hovering and just floating around that spot as we speak right now. And still building these higher lows ever since last week on that CPI, it is still building higher lows. So, you can't deny that it hasn't broken down, yet. Really, it hasn't really extended, to be honest, too high up in this channel. But it's a rough channel that we kind of have drawn in, and it's, this morning it was towards the highs, and now it's kind of right back in the middle. So it's just been, bouncing around, it seems like, and it hasn't been as, wild in terms of volatility outside of this channel really since August. So about a month and a half now that it's been in this channel to the upside ever since it hit those lows. And the crazy thing is, like, you see how fast this thing can move. This has been pretty nuts to see. You look at we just look at the big picture. You look at the 10-year right now, and from August 2nd, August 2nd, you're talking about this thing down around 2.52, 2.515. And from August 2nd to September 19th, so literally 1 month and a half, roughly, 1 month and a half, this thing goes from 2.5 roughly to 3.5%. That's nuts. I mean, that's a massive move. So, people thinking about the backside of this, if and when it's going to come, right? It can happen fast. That's the thing. So we'll see. But again, we got to get that breakdown for it to happen. That will be good for stocks, and there's no guarantees it happens, right? I don't think that what Powell's going to say is going to logically make sense with the 10-year, if it were to fall or to go. I don't think whatever he says would probably on Wednesday is probably only going to make sense for it to go higher. But again, we know how things don't just work perfectly like that, right? Just because he says something doesn't mean the market's going to take it, and react the way that it might make the most logical sense, right? So we'll see what happens come Wednesday. But that's the deal. Good afternoon, guys. Hope everyone is doing well. Outside of the 10-year, what do we got? The VIX is down today a bit, even though SPY is kind of flat, or it's trying to get back flat. VIX was up a little bit up here towards 28, pulled back, and VIX has kind of been in this little range from like 25 to to 28, 29, and it needs to kind of, make a move back down to that trend line, or either it's going to pop up and push up to 30 plus. Obviously we have the catalyst to do it on Wednesday. That is the deal. We got the catalyst to do it. So we shall see what shakes out by Wednesday. But notable strength in IWM today a little bit, relative to the Qs and SPY. IWM is actually up about 0.5% right now. It's actually up close to the high of the day. Yeah, look at that. IWM's got some range to go, and the thing about IWM is that it has, if we get a rally into the close here on SPY, I think IWM should fill this gap. And what I mean by that is this gap right here. Let me zoom in. I'll show you. So I'm going to get rid of this purple zone. It was a zone I had leveled from last week. I forget why, but that was from last week. Let me go and draw a new one in, and that is one that we are right now. We kind of got up over yesterday, or sorry, Friday's highs. So gap to fill back up to like 180.85 or so, 180.75. So you still got about another $1 to go in terms of upside, which really could happen pretty fast if we got a rally into the close to fill that gap. So we'll see. It could be an idea for a push up to that, about $1 more from here on IWM. So it's got some strength relative to SPY and to QQQ and the NASDAQ. So small caps showing some strength. IWM is not really coming. The 10 years not really down. So, it's not really making perfect sense in terms of that, but we've seen small caps holding up generally better the past couple of months anyway, as they took the brunt of the beating, early. So there's that. TLT today is actually up. It's actually up 0.4%. We'll see let's look at this big picture on the yearly or on the 1 year chart on TLT. Yeah, it's trying to kind of hold a low from last week. It's, lows last week, 106.25 or so. It's trying to hold that low for now, but you kind of have this downtrend that I drew in right here. And it looks like obviously the big catalyst on Wednesday from the Fed, but it looks like if you can break this trend, there's probably a good chance you're going to fill this gap right here, which is up around this 112 area. Volume, not much volume resistance up until about 112 really. So very good chance we get to 112 on that break, in the coming weeks, if and when that happens. So that's, I guess, the first spot to look for in TLT. And then after that, targets up to like 115. And then we can kind of go from there and see where it wants to move. But that's the thing. That's what I'm looking at on that. Apple, believe it or not, today, even though the market's kind of flat to slightly red across Qs and SPY, even though it's green on IWM, Apple's up 1.5% roughly. So it's funny. We were talking about this one last night. And, look at Apple, I think last week on Friday or even Thursday, we were talking about seeing some stats about how Apple is now like the number one most shorted stock in the stock market. Well, and we talked about the potential down or the risk of that on days where you have rallies and stuff, and where shorts kind of get caught. Or let's say you have a gap down. Gap downs are the perfect bait. The gap down moves are the best bait, because when you have a gap down overnight where you close at, let's say you close at $152 and then you open at $150 the next day or over the weekend, whatever, it's a gap down of $2. When you gap down like that, it's the perfect recipe for people to, to panic sell and to FOMO into buying puts. Same thing with a gap up. A gap up is like the perfect recipe for people to panic buy, right? Into calls to say, oh my gosh, we're going higher, I got to get in, right? And then you get that pullback. And so what we kind of saw in Apple today was that kind of that same deal, right? It was SPY on steroids, and that's kind of what it looks like even right now. It looks like SPY's chart, kind of a little, just with a little bit of an injection of something, right, juiced into it, because it opened up. SPY essentially opens up this morning right down towards the lows of on Friday. Apple was opened up pretty close to the lows of Friday. Had about, let's say, where was it? Had about, 149. Friday's lows were at 148.35. So, about 65 cents away from the lows of Friday. And then obviously we saw what happened in the market. S&P kind of just ripped up into the morning, and Apple did the same thing, except instead of just going from being decently red to getting back to like up towards the highs of Friday afternoon, which would have been like right here, it went for a bigger move. And I think that has to do, that's going to have to do with it being one of the most shorted stocks. We'll see, but I think that is going to add some juice to some of these upside moves, especially when the market bounces and stuff like that, like I've been saying. So who knows what that means bigger picture? Like, and I don't think it's really going to be it's not going to have a massive impact on Apple's. Like, Apple's not going to short squeeze. Like, you're not going to short squeeze Apple, right? But if the market kind of squeezes out a little bit, there will be probably a pretty big move on Apple. And when I say not going to short squeeze, yeah, it can totally squeeze out shorts, right, for upside. Because again, if it's one of the most shorted stocks, yeah, when you have upside days, you're going to get people who, are squeezing out, panic selling or panic covering, right, whatever. That will be part of it, but you're not going to get the effects that you can see on like a penny stock is what I mean by, short squeeze. Like, you're not going to get like a true penny stock short squeeze on Apple, but you can get a nice little, extension to a move, which is I think what you're kind of seeing today. So we will see. Picked up some Labu. Yeah, you know what? The XBI took a little beating this morning. It's bouncing back a good bit, which is actually a pretty nice sign, but it looked like it hit the lowest level it's been since that run up that we saw in August. But pretty nice candle. We're gonna, it's trying. If the market rallies here into the close, XBI could go green, or it could at least attempt to go green. It's got about $1 to go still, but it was down, pushing down on the low 80s. It was down at 80.35. It was only 35 cents away from going sub 80, which we had charted this out to be the next. Like if I'm looking at this position and saying, hey, I want to buy more, like this would have been the next technical spot that I like. The most from a chart perspective to buy more, which would have been like right in here, sub 80 down to like, 78. And then of course, lower, you could buy lower if you have the conviction that, hey, it will go higher into next year or whatever. So it doesn't really matter. But this is kind of just a technical spot that would have been a really good risk reward in my view. And it kind of just missed it in terms of it got close and then it bounced. We'll see if it kind of gets continuation to the downside this week. And I think a lot's going to be, relying on the 10-year and what happens with the Fed meeting and all that stuff and how the market reacts to that. And like I've said, I don't have crazy high hopes in either direction. I don't know about, based on everything I'm seeing, I just don't know about what is he going to say? What could Powell say realistically that could send us down to hit new lows in the market? I don't know. I think that a lot of that's baked in with the CPI. Everyone's assuming it. Everyone's already putting words in his mouth, and he's already said what he had to say back in August. So he's not going to be. I highly doubt he's going to come in and say something positive. But again, I just don't know what he could possibly say that the market's going to go, oh my God, I didn't see that coming. You know what I mean? So we'll see. Labu calls for December. The only concern that I have about that time frame is like if this gets prolonged, like if we don't bounce relatively soon, like then you can kind of burn on those calls. It's gonna kind of suck. But the thing is with playing something like that, if we did rally, let's say October, November, right, December timeframe, those are going to do insane. They're going to do so well because XBI, like we said, XBI can move massively, and I think that this thing will be up at $100 or pushing the upper 90s very, very soon. It could happen. We saw what happened in like a matter of a week, right? The thing went from 78 to 95 in like a week. So, we're down here in the low 80s, could be at 97 in, a week, like based on that move. It's possible. You need the 10-year to come crashing down ideally, which hasn't happened. So things have to kind of align. That's the only concern that I have with like playing something that close. Because if we just kind of, trickle around for a bit and don't really make a notable move, down or up, and you kind of just sit in there, you're going to get kind of burned on the theta decay. So that is the only concern with that. But again, I still like it. The timing is where things get, a little more confusing or a little more difficult, but, it offers that's the risk reward that you got to be willing to take at the end of the day if you're going to play shorter term time frames. October seasonally good month. Yeah, I mean, if we hold, if September actually ends up, if we kind of move through September and I think next week, the next couple of trading days, this week and next week are historically some of the worst from what I've seen. Actually, we can pull it up and I can show you guys the actual chart. I was just looking at this one earlier. Let's see. So yeah, I mean, we talk about seasonality a lot, and it's kind of cool to look at. But what I do want to do is go to Ryan Detrick. He had a good chart that I saw, and he's a good guy to follow for this type of stuff. But let's see if I can pull it up. September. I think he posted it last week, if I'm not mistaken. Here it is. Yeah. So here it is. Here's the chart. So yeah, you guys can see it. I'm not blocking it, but yeah, this area circled in red is essentially from the 20th to the 27th of September or 26th of September. This is like a 6 or 7 day trading span. That is the worst block in the month of September from a seasonality perspective. And this is looking at the S&P 500 average return per day from 1950 to 2021. Pretty crazy. But let's see. So yeah, I mean, this is just average numbers, but on average, you're talking about the next like week or so, week and a half, you're averaging down about 0.15 to 0.25 or so on the S&P on average. It's funny though. I'm not sure if you guys like do this stuff. I mean, I do it a lot because I just kind of have this. Sometimes you get kind of caught up in this stuff, but it's really funny to see when you look through comments and you start looking at people and, you know, everyone's got their opinion. The comments of some things are hilarious. And especially right now, especially in the time where you have a lot of people on edge, you know, because you have so many people, guys, buying puts right now. And the sentiment is so negative, as we've talked about. Does that mean that like we have to go up? No, it doesn't matter. It doesn't mean that all these people are going to get burned. But the put call ratio is at 1.04 now on the 5-day average. I mean, that's freaking high as hell. We got up to 1.1 back in June, but we're up pretty darn high right now. Going into again, that's another reason why going into the Fed, meeting this week. Well, guess what? Everyone who wanted to get puts and who got freaked out by CPI. Now, if you got puts early on that CPI, after the CPI on Tuesday of last week, you probably made some money. Like the market's down from that, so you probably made some money. The problem is for those who kind of were late to that party or who are buying in now, maybe. And we are just like maybe holding up, and now we're not. We're kind of holding a higher low or whatever. Let's just say we're going to the Fed meeting, and it's kind of I don't want to say it's a nothing burger, but I think it could very well pan out to be a nothing burger where like we get past it, and it's one of those things where, okay, now it's over, sigh of relief, and the market rallies. People can get burned quickly, and then this put call ratio can reset where you get a nice amount of people buying calls again, people starting to get feeling positive about the market again, which resets and then allows you to have more downside realistically. But it's funny. I mean, when everyone's in that mode, those comments and you really see it come out on social media, especially. So it's fun to look at some stuff like this when you kind of can see people in the comment sections and whatever going like, wild about like why they are going to be right and they have to be right. And I mean, sure, maybe you are, maybe you are, but what if you're not? All right, let's look at SPY. It's trying to push a high of the day here, or trying to push that downtrend break. I'm sorry, not high of the day. It's not close to high of the day yet. Could make a run there though if it gets going over this downtrend. It's trying to though. It's trying to break this downtrend and push to the upside. Holo. What's HOLO? What is that? Hollow? I have no idea. I don't know anything about the stock, but it's a SPAC, right? It's an IPO today. Is this today? Jeez, man, what the hell? Oh man, I don't know. These things could pump. These things, it's had its pump, and it seems like it got just destroyed after that. So I don't really think I wouldn't be interested in this thing. I have no idea. I never touch these types of IPOs. Some people love them. I never touch them. That's just me. Some people are good at them, handling them, but I don't know. I think a lot of people kind of get caught up in buying these things, wherever they bought them, and then they bought the dip wherever the dip was, and then it kept on dipping. And then at this point in time, anybody who bought this thing today is underwater. Anybody who did is underwater, So you can see where the pain of this trade is, and so any bounces tend to be just relief bounces, and people just dump their position into. Could it turn? Yeah, but I don't know. Unsure about everything else. Is marketing a little dizzy? The kangaroo effect. Watching. Yeah. No, I mean, I don't think there's a reason to cut those yet. You had some good. You had a good bounce so far. So you had a nice little bounce off of this morning's low, and it's not doing too bad. You just want to make sure that, again, if the 10-year rips face, the 10-year yield rips face into Wednesday or Thursday by the end of the week after the Powell speech and after the Fed rate hike, this is probably going to come down to this box. And could it come lower? Yeah. So that's as long as you're either, willing to add into that, or your plan is to cut it below, then listen to the original, thought process and cut it below. Well, the thing with XBI, right, is again, it can make that 20% move in a week. We've seen it do it, right? Well, let's just see maybe it was not 20%. let's see. No, it was 21% actually. So we've seen it make a 21% move in a week, roughly week in a couple of days. Not, actually, no, this was literally a week. I mean, this is now from this day, the 2nd of August. That was one trading day, 2, 3, 4 on the 5th trading day. So literally 1 week, I guess, technically trading wise, right? 1 week later, it was at 95. So it went from 78.50 to 95 in a week. 20+%. So it can do that. It can. But if you go back to what happened in August, right? If you go back to what happened early August, it wasn't like a perfect correlation with the 10-year, which is I was kind of surprised. Let's see. And it wasn't a perfect correlation with the market too, because I think at that time, this is what surprised me, is that the 10-year actually from that span went from that 2.52 up to about 2.9. While not that it was still relatively down compared to where it was, but XBI surprised me because it made that big move, that 20% move, all in a time where the 10-year actually was going up, relative. So it was kind of weird, but so it's not, the correlations are never perfect, right? But useful, to say the least. There goes SPY. Look at that. There she goes. Classic move this afternoon here, right? What did you have? You had essentially, this is more of an intraday kind of just, hindsight look, right? You had this VWAP area was where you were kind of holding support, a couple of wicks down to that level. You ended up having this area that was an area of resistance back in here. So you extend this box across and you say, okay, wow, look, prior resistance, we broke through that resistance, came back, was holding support. What did you have? You had that stop loss hunt candle. So you had that 5-minute span where those two candles where you break below VWAP. Happens a lot. Doesn't always happen, but it happens a lot. It can happen a lot. Break below that VWAP, stop everybody out, snap right back above, and then go. And then, so the question is, or the concern is like, okay, well, how do you even play that? Like if you're looking to play a VWAP bounce and you thought like, hey, this is going to hold up, well, wouldn't you have gotten stopped out? Yeah. I mean, you would have. So either you can't play a short-term expiration and you have to play it for like a 15-minute, these are 5-minute candles. Maybe the way to play it is a 15-minute candle. So you go back and say, okay, if a 15-minute candlestick closes below that VWAP or that level that I chart out, right? Which in this case would have been like 1 or like 385, which we didn't get one. But if one did, that would be the stop. And so, you can't play same day expirations and then trade based off 15-minute candles because you see what happens and you can get blown out of positions, right? Even if on a 15-minute candle and then it doesn't reverse or whatever, it's like, it's tough to kind of play it like that. So you got to have time if you're going to play it with time. But sometimes playing with those, those longer time frame candles could be more helpful. The 1-minute candles are terrible. 5 minutes can cancel some of the noise, but you can still have those situations on the 5-minute, like today, where you kind of had that stop loss hunt and then boom. And again, what happens here? People see the breakdown, they're going short. They're going to play this thing, hey, if it breaks below you, I'm going to go short. At the same time, people see this breakdown. If they were long, if they were buying this thing right here with VWAP support, guess what? They're panic selling or it's hitting their stop losses and they're going, they're going neutral on the position. So that's what's happening at that point. And it's, a classic, it doesn't always happen like this, but it's a classic, dip and rip scenario. In this case, you had that lined up with a downtrend break. Boom. Look at that massive, this is a 5-minute candle, by the way. Now that's a massive move, So it took its sweet time to kind of chop around through, but once it broke, boom, it went. So there goes SPY. It's attempting to hit up those highs of the day. It's got to go a little higher, but it's looking, that's a beautiful look right there. Firm, Ford, and Amazon. I think those are, I think that we can look at, I'm going to look at Ford in a second. I haven't looked at Ford in a while. Let's look at it. Look at that. That's a massive move. What is, I think part of this right here too is you add in, I'm sure Apple's having a nice little run right now. A lot of people are short Apple, so it's probably pumping right now. You got a lot of people buying puts, right? Like we've been saying. So that's going to add to this. That could add to some of these little breakouts and these short-term little pops that you're going to see. Ford, let's take a look. Haven't checked in here, I feel like, in a bit. Let's see. So Ford had a massive run into the end of the year, right? Then so obviously since this year began, it gets gotten killed. But what you're looking at on Ford is kind of this this nice little downtrend or this nice pullback to that 50 SMA. That's a nice pullback there. So if Ford is, if that 50 SMA, which is around 1450 or so, yeah, 1458 is where it's at right now. So at 1450, that area holds. It looks pretty good. You need to break that 200 moving average, which is up over 16, and it looks decent if it can break that or if it can hold this level. And Affirm is going to be kind of your, I like Affirm too, but the thing with Affirm is that it's going to be your high beta. So I mean, if we go risk on, right, 10-year comes down and we go risk on, and this CPI is peaked and all that stuff, and the eyes are on the Fed pause next year at some point, and the market starts pricing that in. I mean, Affirm can do those crazy moves. I mean, Affirm from the lows, right, from May lows went from sub 15 to $40, so well over 100%. So depending upon how you played that or average in or whatever, like Affirm is your high beta. Ford is not going to move as much, but it has moved a lot this past year. And then Amazon's going to be kind of your solid dollar cost average. Let that thing do its thing for the next X number of years. I wouldn't want to. If I was holding Amazon, I would not want to sell that. I wouldn't have no interest in selling that anytime soon. It's just, not interested. It's a beast. Amazon's a beast. Unless you feel like that Amazon's going to be slowing down or something else is going to change in that environment, right? In that, it's not even like it's a market. It's Amazon's everything. It's not even like Amazon is only this. It's Amazon's freaking everything at this point in time. Micron born the hell, chopping around 52. Yeah, let's look at it. Let's see. Yeah, I mean, it's sitting there. It's interesting. It had another red day. It's sitting there, but I guess you got earnings coming up in a couple. I guess does that next week or something like that, the 29th or 30th, whatever that is. Is that accurate? Let me check. 29th, you have earnings, so maybe this thing doesn't really trade too crazy until then, but I would expect something to move, right? It's holding last week's lows, holding the lows of the year. As long as the area holds. I think it's still fine. But yeah, it's a pain sometimes when these don't move as fast as you want them to move. Thoughts on the rest of the week? Yeah, I think that's how I feel. I mean, going into, here's SPY. We'll look at SPY's daily chart. I think that you're going to have a good shot to come back up to that 390 this week or prior to Powell. So, tonight, tomorrow. Good chance we push and test up into 390. That would be a really good spot, on paper to go short, if you wanted to go short the market right there on that little bounce back. And then of course you have the Powell catalyst on Wednesday and that. But the thing with that is, like we said, the CPI price, I think, priced a lot of that in, and it freaked everybody out last week. Like I've been saying, like, what is he going to say that we don't know? What is he going to say that the market didn't price in on, or that the market didn't, react to off that CPI? And at the same time, guys, here's the thing, in honest reality, like, yes, what people say moves markets. It can move markets in the short term for sure with these reactions and algos and all that stuff that's going on. But at the end of the day, like, what Powell says today, right, is almost, you look at it as almost a cover up for like what's actually happening. Like, whatever move we get, based on, let's say, Wednesday, like, everyone's going to look and say, yeah, it was because of Powell. But in all reality, like, it may not have had anything to do necessarily with that, So it's those who have the power to move price, are going to move price. And that's the deal, essentially, at the end of the day. So I would say my speculation is that it's we have one of those relief situations where, like, you get to the hike on Wednesday, market does whatever it does, and then Wednesday post Powell, we have a relief. Okay, like, the market kind of says, all right, and just starts to rally or just hold up, or nothing crazy. I don't think is going to necessarily happen. If anything, I think you're skewed to the upside again if we had that situation, because guess what? You get past Powell. I'm sure a lot of people who bought short-term puts, right? I think a lot of this put call ratio has to do with has a lot of short-term puts baked in. So on top of, well, not on top, but if you just add in this Powell speech, and let's just say that nothing happens. Let's say we get to that, and SPY is at like let's say where it's at right now, 387, and it's still there. You're going to have a lot of people who are like, wait, what? Like, I had hedged myself, or I bought these puts for this specific event, and they expire on Friday. I got to get out of them right? Potentially. And so people might just dump them or dump their shorts, and then you can get a little bit of a squeeze out into that too. So I think that's honestly a very, very real possibility, But then again, it's always possible that he says something wild, right? So I'm sure the market will be on edge for sure into his meeting, although I'm not really going to be too concerned about the 5-minute moves, right, on Wednesday. More so concerned about the bigger picture of what the heck happens, right, after that. So that's the idea. Midterm elections begin this year. I don't know. There's correlations to that stuff, and at the same time, you'll think you got people who are arguing back and forth on that front too, who are like, well, midterms are coming up or whatever, and looks like you're probably gonna want the market to be feeling good for Dems, right? If for midterms, like I mean, I don't get too caught up in that stuff, but in theory, wouldn't hurt necessarily Democrats. And by the way, SPY just freaking ripping, just popped like 50 cents in like a second right there. Look at that. That's a rip. Look at that. So new high of the day on SPY there. Big move. Jeez. But yeah, like we were saying, we'll see. On paper, in theory, it would make sense. I guess markets up or at least bouncing back, not at all-time highs, right? Because that's gonna be wild. It would be ridiculous if we got to all-time highs that fast, right? But at least maybe SPY up over 400, around that level wouldn't be like, okay, we're at it would make people feel a little bit better that hey, we're not at we're threatening new lows like right now. People might feel a little better about that, I guess. And I get it. It makes sense. I'm not sure how much of a factor that really is, or that will be, right? Or how much of that is. Apple, like Amazon, just hold. I think so. I don't disagree. I mean, if you ask Warren Buffett, he's holding it. He's got a crap ton of Apple. It's like his biggest position by far. My thing on Apple is that it's up a ton. I wouldn't be necessarily just buying, hand over fists right now, unless it came down substantially. But, it's a dollar cost average type of stock that, it's part of the portfolio. And the way I see it is that if you have, achieved, or if you've been a part of Apple for a long time, let's say my dad, for example, who bought Apple many, many, many years ago, and it's now a very large percent of his portfolio and his retirement. And so of his IRA and stuff, it's like this 401k, is it worth being this, weighted to Apple, this heavy weighted to Apple? Maybe not. So that in that situation, like I said, is where you kind of could sell some covered calls. And if you get taken out on some of your shares, fine, no worries, especially if it's in a retirement account, whereas you're not going to pay tax on that. If you are going to sell that in an individual investing account where if you sell it, now you got to pay taxes this year on those gains, I would say maybe that's not something you want to do. But if it's in an IRA and it's now worth 50, 60, 70% of your portfolio, do you want to be just tied to Tim Cook and Apple? In case something crazy happens, I would want more diversification there. So that's me. But yeah, I think Apple would probably be fine. Obviously it's going to do what the market does to some degree. And I think, again, if the market was to rally, let's say, and like you're seeing today, Apple's up 2%. Look at this 5-minute chart on Apple here, because it's now the number one, or at least it was up there last week as the number one shorted stock in the stock market as of last week. I think it's just because it's an easy one to play. It's an easy stock to short, and you're going to have a little bit of a higher beta than SPY. So, okay, I'll play Apple short. That's going to add to the squeeze. That's going to add to the upside, factor. So, I mean, Apple, based on that, if we were to rally in the markets, right, again, I think back up to, let's say the S&P back up to 420, 425, 430, back to where it was in August. It's a very good shot. Apple has a run at highs of the year. All-time highs. I think it easily can do that because of how many people have jumped back in on the short side. So that'll add to the move up, ideally, right, on it. So we'll see, but yeah, totally agree. People love to overly hype these events. No, I mean 100%. And here's what I this past weekend and even today I finished going through it. I'm not sure if you have ever watched, but if you go and look up the Mark Douglas seminar, he's the guy who wrote Trading in the Zone and whatever. It's a pretty big name trader, I guess, in the trading community. In terms of his trading his thoughts on trading psychology and stuff. But essentially, I took a deep dive through that and like really paid attention and like dove deeper into it because I had some time to kind of like sit down and actually like listen to it this weekend and stuff. You can read the books too. I have one of the books, and I've just listened to the seminars though, because you got people asking questions and it was kind of good back and forth. But what it comes down to at the end of the day, this is like the biggest takeaway that I would take away from that. In summary, what it comes down to is that if you are an investor, it's different, right? But from a trading perspective, if you want to be a consistent trader, which I think is something that I will be taking and applying this to the small account challenge like massively. That's the goal. And today we had a green trade in the small account challenge where we got the money settled, so we were able to play IWMs like at the money, and it was a pretty clean trade. It worked out nice and made whatever percent. So it was good. And we'll see if we can keep stacking it up, which is great. But the biggest takeaway was the market's random, trading's random, and then when you press the button, when you click that button, right, and you're looking at your chart, for example, I'll go to SPY, right? Let's say you were going to play SPY here today, and you said to yourself, I want to play SPY for like a downtrend break or, for a VWAP bounce or whatever, right? You press that button, your risk, you establish your risk going in, and you respect that, right? You have to 100% be okay and understand that it is random. Just because it's a setup that you've seen work in the past, just because maybe your numbers tell you it's a 65, 70% win rate, it doesn't matter. Every situation is random. And when you click that button, you are relying on the perception of other people in the market to move price. It is not in your control. And it could be, quite literally, that somebody, market maker, big money, is like, all right, I'm going to lunch, market sell, tanks, and you have no control, right? Even though it was the most perfect setup in the world. Doesn't matter. So you have to respect it. And you can't, the biggest thing that I have found, and especially like subconsciously, that if I go back and look at it, I get into that mode of like, oh, I'll average in, I'll average down. I think it'll work. I've seen this happen before. No, who cares? Doesn't matter, right? There'll be the next one tomorrow, right? And over the course of 10, 20, 30, 40 trades, if you're 60% win rate, if you're 55% win rate, or if you're 50% win rate, and you're able to pull a 2-to-1 risk reward on every trade roughly, and you're obviously looking to target more upside than downside risk, and you're respecting that risk, trading is all probability, and it has nothing to do with me trying to be right now, because in the grand scheme, it doesn't matter. It does not matter, and that's not going to be a consistent strategy, right? And it just leads to blowing up, to big losses, right? When you don't respect that. And it was like a pretty big take. That's the biggest takeaway. And I think that's something that I definitely don't do. I don't do a good job of that, right? In terms of the small account or even other just trades. Now, when it comes to kind of investments and playing the macro, it's a different animal. But in terms of like shorter term trades, like I would say day trades and even short term swings, like you have to just let it play out and respect it, and that's it. Because at the end of the day, you have no control. No control. Doesn't matter how, what CNBC says about, they're going to always have a narrative because that's what they're paid to do. They need to always make up an idea of why price is up today or down, right? So why is it up today? Oh, short squeeze, or because, people are, looking to, I don't know, whatever, reposition, or people feeling, it could be anything. They're going to make it up. Doesn't matter. And is that actually the reason? We have no idea. There's no way to know, right? So when you kind of take a step back and think about it with that kind of perspective, it's honestly pretty cool to think about, right? It's a just different spin on it. It's a different animal. Heard of Mark Douglas, gotta listen. I would recommend. I mean, the YouTube stuff is kind of cool. It's pretty easy just to plug in and do whatever you're doing and listen to it in the background or whatever. Go for a walk or something. I would recommend reading too, but I sometimes find it hard to like sit down and read a book, but I don't do enough of it either. So it's probably a good thing, even just 5, 10, 20 minutes a day, 5 pages a day, 10 pages a day. It's a good idea. Honestly, anything. 40% of Berkshire's portfolio was Apple, cost basis of $36.94. He's not selling that. Yeah. That's nuts. $36. Chaos theory says nothing is linear and well. Yeah, no, exactly. It's random. So and again, even if it's not, like, again, think about it. Even if it's not random, right? Even if you can actually, predict things and with better accuracy or can give reasons why something is up or moving today, which you do see. I mean, stocks have news and stuff and run and whatever. Yeah. So it's not like a perfect necessarily way to think about things all the time. But if you do think about it in terms of, oh, it's all just random anyway, you'll see how much that it's going to affect your trading massively. Because if you actually believe that, you're not going to hold a loser because you think it might come back. You're going to say, no, I'm just going to cut it off and I'll find the next one tomorrow. And hey, over the course of a week, if I take 5 trades or 10 trades or 20 trades and I can be on the 50+%, accuracy side and I'm handling my risk just fine. It doesn't matter. I don't care what happens across all these. Do I need to be right every time? No, it doesn't matter to me. I'm going to be right, on average 55% of the time. And that's more than enough to be consistent, right? Over the course of, weeks and months and years. So when you think about it like that, it's a pretty cool way to think about it. But that definitely is more for the active trader and not someone who's necessarily looking at the macro, because the macro, if you're looking at investing and whatever, you can front run the macro and be early. In the macro sense, you always want to be early to catch the bulk of the move. Hence, like what the heck is going to happen if the Fed has to cut rates or whatever, TLT, for example, is going to go up and yields are going to come down. So like you can, like, there's ways to predict those things. Like, yeah, you can front run those things sometimes and make money off of that. And that's not necessarily always random, but as you bring it down to shorter term time frames, I think that random element just, becomes so much more apparent and clear the shorter the time frame. So let's see. Apple's trying to, hold up here. Let's see where IWM. Yeah, IWM, like we just said, hit that pretty much. It's almost there. It hit up to the spot that it hit up to the lows of Wednesday's lows. So hit that target, and then think a little 181 would be technically up towards that full kind of gap fill almost. So a little more, and it gets there. Sounds like a way to maintain a positive. Yeah, no, 100%, because you're just looking, you don't care at the end of the day. You're just looking for an edge at the end of the day, right? And if your edge is playing, support resistance and trading based off support resistance, and that edge makes you right 55, 60% of the time, I mean, you got a winning system if you can dial in the executions, which means you have to respect your risk. You have to take your profits when you're going to say you're taking your profits, and you have to let that play out over the course of days, weeks, and months, and not worry about being wrong 3 trades in a row, because at the end of the day, you still know that, hey, if I've proven to myself that this is a 55% win rate strategy, which is where you come into journaling trades and stuff, then great. And then obviously as time goes on, you'll realize, hey, like I might be bad at playing breakouts, and I'm only 45% on those, or I'm 55% on breakouts, but on support bounces, I'm 75. So if I just eliminate the breakouts, even though I was technically profitable, I can keep my trades more concise. I can play them maybe a little heavier or whatever on the breakouts, and I'm going to be right on average more of the time. And so it's going to clean up or eliminate some of the choppiness of the downside draws I see in my portfolio. And so like that's the little things you can do over time to your strategies and stuff. But yep. Look at 1991 on S&P 500, January of 1991. Let's see why. Let's broaden this baby out. Do we even go back that far on SPY? Let's go to SPX. Can we see a SPY on trading? It doesn't go back that far. Let's see SPX. Yeah, we got it here. 1991. You had a pretty big rally back then. January 1991. Yeah, that was this candle right here. You dip down to 308 on the S&P. This is the S&P 500, not SPY. 308, and then that month you finished up, or you closed up around 343. Pretty big move. Percentage-wise, that was like a 10%er after a decent pullback in 1990. Late 1990. You pulled back a decent amount, and then you rallied into early of 91. I guess that kind of almost, I guess you can think about that, almost looks like now, except we pulled back a little bit earlier than this chart specifically. But let's see, go back to this guy. So look how funny this chart looks though. Like we were saying too, You broke down, and now you're getting back up on SPX, on SPY. You're getting back up into a nice area of resistance. Was a prior support. If Fed cut rates 1991 January back again, I mean, I don't know, they're not going to cut rates. I don't think, unless CPI starts to surprise and come down faster than expected. I don't think they're going to cut rates, or that at least that thought process, at least near term, is not going to happen. I think if anything, the most likely scenario into next year would be that at some point they're going to pause. So let's refresh us and see what the current projections are for the hikes. So for this hike, 82% chance of a 75 basis point hike. That's the plan. So that's what we're going to see. Again, if we come in again on Wednesday, if they do a 100 basis point hike, I mean, not all bets are off, but we're going to see downside. I'm pretty sure we're going to see downside on the market if that happens. Now, one positive on that front would be like, okay, some may say, well, if they do it now, they're more so trying to front load it so that we're actually going to get to that pause sooner, or that slowdown in hikes sooner. And that's technically maybe bringing that horizon closer to the end of the tunnel, right? I guess that could be the only spin on a positive, I guess, from a 100 basis point hike. Maybe you can make that argument, but I don't know if I would necessarily want to bet on that. I would probably guess that we're going to come down. But here's the time. So you got November 2nd, December 14th, then February 1st. So maybe it's like a February 1st or a March 15th, like one of these meetings that we start to, maybe it's March that we pause, or something like that. I don't know. But market will be, the bond market will front run that move, and ideally the stock market will front run that move as well. I just saw a stat saying that statistically speaking, the time that you want to go long stocks is when CPI comes down, I think under 5 or 4%, something like that. I think I saw a stat. I don't know. I mean, I think that on this situation, you're probably going to see the bottom be in earlier. I guess maybe the better risk reward is at 4% or 5%, but the bottom will probably be already in at that point. I'm guessing on this cycle. So able to launch a new E-Trade account, go start to create an uncorrelated portfolio. Yes. I mean, that's the most, I think, again, I really think about this too. And to some degree, I was thinking about, like, I like looking at the macro, and I enjoy that. I do have a finance, like, actual background in school too. So I kind of like, there's an interest there. Does that interest outweigh the potential of a short term of being more interested in the short term? Yeah, that's always been there. But I think that cutting out a lot of the crap, I try to, at least as of late, trying to cut out as much crap as I can. And what kind of crap is that? And it's been, for me, in, over the years, being in like a bunch of different Discords. I'm out of those. I don't really care. There's people, alerts, like alert-based ones. No, out. I don't want to have that in my head. Being or following people on social media and listening or getting too sucked into the narrative and the way that they're trying to spin things, right? I hope that we try to keep things as unbiased as possible. We're just looking at charts. At the end of the day, we're looking at charts. We're looking for the best risk rewards, looking for edges. Where's your edge, right? What's potentially coming down based off of data that's in front of us and, the macro, right? What can we potentially give ourselves an edge, right? What is everybody doing? Maybe looking the other way, right? That's what I hope to try to, do more of, or at least do here. But trying to cut a lot of that stuff out. I mean, what I was saying is like the CNBCs I used to, now it's like, man, if that's on TV, it's like, just turn it off. Like the only thing I think it's useful for is news. Like if you want to get news about what's kind of going on and you want to stay up to date on that stuff, yeah, great. But honestly, this day and age, Twitter is going to do a decent job. Just look up whatever you want to look up, and you're going to find, you're going to find the real stuff. Like you're going to find the raw video, you're going to find, the raw tweets, you're going to find the reactions based off people in the comments. Like you're going to get a lot of insight from social media these days too. So, that does a lot of the job for me half the time. So, yep. 100% agree. Now, yeah. So as we speak, SPY's ripping up here. Look at this. So S&P or SPY is up 0.7% now on the day. Believe it or not, we're about to fill the gap down from, what is this, from Thursday into Friday. That gap is about to get filled. We might fill it right here. We got 30 minutes to go. We can easily get there. IWM has essentially, it's gotten close. pretty much filled that gap. It's close. So you're getting the pushes now. They're really trying to push to the end of the day here. QQQ went green. SPY and QQQ were like red and not as strong as IWM. Now they're all kind of coming back into a decent agreement. What about the 10-year? Does it come down at all? No, 10-year's actually up. It's at 3.49, so that hasn't really moved. It's more so a move in the market, not really because of the 10-year or anything. XBI is trying to come back. It's still down 1.5%. I don't think it's going to go green today. Soxol's up a little bit. Had its low, or its lows are back in July 5th, but it's, I guess last week's lows are holding for now. We talked about oil last night. Oil dumped this morning. Bounced back a bit. It's flat. Natural gas is like just positive. It was nasty this morning. That's bounced back a good bit. Gold is flat, down towards the lower end, or it bounced just out of this buy channel. So you want to see it either snap back in, or it's going to stay. If it holds below this and starts to kind of peter off, that's going to be boop, boop. Not a good look, right, on gold, just chart wise. Silver a little weaker, down 0.5%, but it was stronger last week, so you kind of have the push and pull there. That's essentially the update right now in terms of what's going on. Apple's up 2.37%. I mean, massive move on it. I think this is a stock that if you're looking at, like we've been saying, if you're looking at playing the long side and you are looking at, I want to trade something long on an up day, Apple is probably a great stock. Options are pretty cheap. The spreads are pretty cheap, or the spreads are pretty small. And so you got, the pretty tight spreads. And so you don't have to really worry too much about slippage there. And also, a lot of people are in this thing short, using it as a hedge or whatever they're using it as. It's going to give you a nice upside move too. So far, a nothing burger on the PPSI and the POLA, the whole hurricane name stuff. Nothing burger there. I mean, Puerto Rico is getting rocked. I'm pretty concerned with what I was seeing there, because I was looking at some stuff on Twitter today, and from people who've been there and whatever, but who are currently there right now and stuff. The concern is that, I mean, it's not even that bad. Like, let's be honest. Like, it's not even that strong of a storm. I can pull it up too and see where it's at. It's like a category 1 or whatever it is. Category 1, right? Yeah. I mean, and it was like black. And I guess the rain and the flooding was the problem. But I mean, it could have been much worse in all reality, right? If this thing was a category 3 or something like that, right? So that's a miss. It's gonna hit Bermuda. Bermuda. Seemingly, Bermuda generally, it's going to be a major hurricane by Bermuda, so that's going to be like a Cat 3 plus, which is pretty bad. But I think Bermuda generally is able to handle these things quite well. I don't know too much about. They've seemed to have been able to handle these things, and it tends to move a lot faster once you get up to that level. So again, for the hurricane stocks and all that stuff, we got to look at like the bigger picture. Like, is there anything else that's threatening post this storm? Like outside of this storm that pushes through Bermuda this week, by the end of the week, and then gets slingshotted right into Canada. There's not too much. There's something. Oh, wait a second here. Oh shit. That's bad. That's a monster. That's now getting into October. So it's still so far out that like forecast models, they're not going to have a handle on this stuff until you get to like, a week and a half out, 2 weeks, I would say a week and a half out. And then it's like, okay, now we can start, okay, like, is the threat still there a week and a half out? Okay, if the threat's still there, good chance there's going to be a storm. Now it's a question of the track, right? But what this is showing us is that like south of Cuba, like directly south of Cuba, Jamaica, you got something kind of festering here in the deep South Caribbean. Is that even that's technically the Caribbean, right? The deep South Caribbean. And that's Monday the 26th, so that's a week away. So 1 week from now, you might have something formed there, and then if we progress that through, you have Cancun getting destroyed, essentially, right? Getting rocked by a pretty strong storm. 920 pressure. This is, I went to school for this stuff, so that's why I get into it pretty deep. But that's a beast. That's a pretty strong storm. Now, of course, you're out, 2 weeks, a week and a half, 2 weeks out. These models are not going to be perfectly accurate. They're not accurate. They're not that good. They're not. They've gotten a lot better. They're not that good though. And then you have that go into the Gulf, and which is just you're asking for trouble. You got into the Gulf September, October in the Gulf. Gulf is a bathtub. It's at like peak temperatures, so you have a beast storm in the Gulf that just sits there and is going to, it could become as strong as it wants, essentially, depending upon upper air steering. And then you have, sitting just off the coast of Louisiana and even East Texas. I mean, into early October. That's a recipe for disaster there. So we'll have to keep an eye on that. That's the next one to keep an eye on. And again, the whole point about this is that, the last time PPSI, for example, went on a crazy hurricane spike run, I'll pull up the chart. Where is it? PPSI. If we go back to it, I go back to the weekly chart on this thing. It was late. It was actually early. It was October 9th. It was the week of October 9th, 2020. That's where we had our hurricane in the Gulf, and the thing absolutely went 500%. That was like the most insane trade I've ever been in. 500% hurricane in the Gulf. I mean, you got a very similar situation if that pans out, where you're going to have a hurricane in the Gulf early October, looking pretty bad. That will be a true threat to the U.S. mainland, and I think that would be what moves those stocks. We'll see. Hopefully that doesn't happen in all reality, because that would be pretty nasty, and no one wants to go through that. But we'll see. So we'll keep an eye on that, and if that continues to kind of shake out on these models, obviously, you guys know I'll be talking about it, or at least I'll mention it, because it's something that I'm first off into, and second off, when it comes to stocks, there's opportunity there, right? So yeah, it's not really showing up too strong on other models, but then again, it's still way out there. So we'll see. We'll see if this ends up, if it's got anything more in the tank, I guess. A couple models though, it does show it. Let me see if I can broaden this out or bring this out to no, I'm sorry, I'm boring people with this weather stuff, but it's pretty cool. This is the European model that does a pretty good job of forecasting too. Yeah, they all have something there. Late September, they got something that's trying to form south of Cuba and just off the coast of Mexico there, Cancun, kind of hitting Cancun late. That's next week, so into next week. So we'll have to watch that. End of this week, we'll probably get a better feel for like what the heck's happening, but we'll watch it. Back to Apple, it's pushing up, trying to hit highs of the day as we speak. SPY is up, about 0.7% on the day. It's trying to go for highs right now too. So Cat 5 gets it. No, I mean, I don't know, because you never know. You can never first off guarantee that these things are going to move off of something like that. All you can do is be early. And so the risk reward is substantially more in your favor. If you're buying it after it starts to push off of people talking about it on Twitter and stuff, and news or this or that, or it starts getting 25, 30% bounce, like, you're asking for trouble, or your risk reward is not going to be there. But yeah, I mean, I was thinking about the Puerto Rican hurricane stuff too. The stocks, I don't know how much of an impact. I don't know how bad they've lost power. At least a lot of places are out of power there, but I don't know how bad it really was. I just from what I saw, a lot of rain, more so a flooding damage than wind damage to them so far today, yesterday, but it's pretty much moving away. So they should be getting out of the woods, to finish off today and tomorrow. They should be able to kind of figure out how bad it really is. Although they had a hurricane a couple years back that I don't think they really fully recovered from too. And it's not funny, but the reason why I think I was seeing more data or more people, more pictures post video out of that is because a lot of people moved to Puerto Rico from the US the past 2 years because of tax purposes and whatever. So they're all just everyone's just chilling there now, all right, here we are. Now that they don't realize that shit's real down there. You can get, rocked by these storms, and then they don't have the means to handle it maybe the way that you can, at least, or we can on the mainland here. So it's a different animal altogether. So never chase, man. Never chase. Your risk reward is always way better if you're trying to be early. Now I get myself into trouble. I do. I definitely do. Trying to be early sometimes, too early, but yeah, you never want to be chasing this SPY move right here. Could we go to 390 to finish off the day? It's another $1.50 to the upside. Yes. But would you want to chase this move right now? I mean, no, I don't want to do that. So maybe it does, but I'm not interested in chasing that. So that is the look on, as we are finishing off about 20 minutes to go until the end of the day on the market. Pretty nice push to the upside. I got those IWM calls that I had on, the TNAs. TNA calls that I had from last week. Let me see if I can pull these up. What are they trading at? They're still tiny bit red. I started buying them a little early, but I added the last position to that on Friday. I bought January, so I bought January 20th. So either we're going to get a big rally and I'm going to take these off and I'm going to ride these into the promised land, or we're going to break down below 175 on IWM and I'm going to cut them off is what I'm looking at. So we shall see. But I like the risk reward here on IWM on a bigger picture. It's holding up generally a little better than SPY. And into this box is down to like 175. I like it a lot as a buy zone. It was a prior resistance back here in June, July. And I'm thinking that, hey, if these lows are truly in, right? Yeah, could the risk be you come down lower and then bounce? Yeah, sure. Even the lows could still be in and we go to 170. Yes. If these lows are truly in, I do think based off what's been going on, CPI, the 10-year, I think this is going to be a good spot. Could be wrong, but I think that will be a good spot risk reward wise. And we're about to fill that gap, by the way, to the upside. That gap's about to fill on IWM to the upside. You never know too with PPSI if they were looking to capitalize too, or these stocks looking to capitalize, these companies looking to capitalize off that. You know, they know what's happened in the past. You drop a press release tomorrow about how you're looking to, blah blah blah, help, the recovery efforts. You pop a PR like that out, and traders will trade that up. People will be all over that stuff. So it could happen. But again, those are great stocks, I think, to have on your radar this time of year anyway, right? Last year, it didn't work out that well, and they had a little pump, but nothing crazy. I'll pull up PPSI as a good example. But like, if you go back to last year, let's see, where was it? 2021. What is today? 2022, right? So yeah, the run that I had it for was back in here. Was back in October of 2020. And then obviously the market went crazy. It had a pretty big move back here, but it was for a different reason, if I recall, back in late last year. And it was a weird stock too to play during that time. But it was the same idea. It bottomed out hurricane season, September, October, November. It had a clear floor develop on PPSI, clear floor. So it was a great swing trade even back then. You had a move, even if you didn't, capitalize in this massive move, you had a move from $3 on this spike right here in late October, early November to 4. 3 to 4 is great. That's a good move for a swing trade, right? As long as that risk where that level held nicely. So it's a good stock to always have on the radar this time of year. And I think that we're back down. We came down towards that level again, and we're trying to hold the 50 SMA right now. So the risk reward there is good. If we were up here, we had just spiked 100%, 200%. I mean, risk reward is ass. If you ask me, I don't care. But now it's getting to be, a lot nicer. So you just don't chase, be patient. And then, hey, if we get through the end of the season and nothing happens, then nothing happens. Take it off. Right? Or, maybe your stop level is at $3 and you take it off. Turn and burn at all times. Jeez, you guys. Big games tonight, too. Got my Eagles playing. Big Penn State win this weekend. So far, sports-wise, it was a good weekend. Let me tell you, I had this parlay. For those who are into sports betting, I had somewhat got back into it, but also not really got back into it. So I had bonus funds in my account. My account was empty. I lost it all last week, but it was not money that I had money in there, and so I made a few bucks and I bet it all and lost it. The way these things work though is that when you deposit money in, sometimes they give you bonus funds or whatever. Or when you bet, you get more bonus funds. So I had this bet, and it was a 12-game parlay. Okay, college football. So I had picked a bunch of teams to win and then some teams to cover the spread, and I had been going through, and it was Nebraska. It was Oklahoma, then it was, Alabama to cover the spread, which they did. Oklahoma covered, Alabama covered. It was a couple other things that a bunch of other stuff that had to happen. And it was all kind of stacking up one by one. And I'm sitting there let me check on that bet. And then come mid-afternoon, I check that bet and I'm like, holy shit, 6 out of the 12 things happened. That $1 parlay would have, if I bet $1, it would have turned into $1,300 if all 12 things happened. So now I'm 6 things down. First off, I've never been that far in a parlay. I'm like, holy shit, 6 out of 12 have happened right now. And then I'm like watching, I'm like, oh, it looks like I had Appalachian State to win. I'm like, oh, it looks like they're going to lose. They have a massive Hail Mary. Last play of the game, they win. I'm like, oh, holy shit. 7 out of 12 have happened. This is actually becoming like potentially real. And then like, I think after that, I think I had Marshall to win. They lost in overtime, and that was the end of it. But I was like kind of sweating in a good way. I'm like, oh my God, I almost, had rent, on a $1 bet, had rent paid, right? But that's the game. I mean, I hate, as I've done it more, I hate it because I much more rather just watch the games and just enjoy the games rather than having to have money on the line and essentially yelling at like college kids that maybe they seem like they're massive, adults, but they're at the end of the day 18, 20 years old, like some of these guys. It's just like relax. But big Eagles, I got a Penn State won against Auburn. Eagles got tonight against Minnesota. We'll see. I'm going in November to a little Penn State game on Saturday and then Philly on Monday for an Eagles Monday night game. So all I'm hoping is that both teams can be like relatively competitive come that time. It's still 2 months out come that time, so that the games actually kind of matter. So I'm not going to them because like past 2 years, Penn State has done great early, and then I go to a game and then it's like they lost 2 games, 3 games, and the season's essentially over in college football at that point. Like, okay, you lose 3-4 games, you're done. You're done. You lose 2 games, you're out of the playoff. But hopefully they can hold it together until I get there and to watch at least a meaningful game. So we'll see, because it's more fun when it's meaningful, right? At the end of the day, jailbreak the fire. No, here's what you got to do. Okay, don't tell anyone that I said this. Go to and it sounds nuts. Go to methstreams.com. I'm not going to type it in because I don't know if it's illegal. But if you go to methstreams.com, you'll come to a page and it's going to say welcome to Crack Streams, and there's going to be the ability to pull up essentially any sporting event you would like at any time that's on this site for free. It's probably illegal, or very, very sure it's illegal, but that's a little hack. Methstreams.com. Yes, meth. But yeah, so if you don't want to pay for, because the thing that sucks too is like if you pay for whatever or you're on cable, right, you get whatever games, but you don't get some of these random games. Like you don't get like, the Appalachian State game. I saw that Hail Mary literally live. No, it's like you're delayed by like maybe a minute on these streams, so take that into account. It's not a huge deal, right? I don't think it matters. Where I live and I have bars below me, it actually kind of is a big deal because I'll hear the roars of the crowd, then I'll go, oh shit, watch the game on my computer or the TV, right? I'm like, okay, something's going to happen, and then I know something's going to happen, so it's not as big a surprise. I just don't know what's going to happen. But yeah, there's a lot of free sites you can stream these things, and it's probably very illegal, but I'm not the one streaming them. I'm not the one like that's like making the site or anything. I'm just like, oh, it's there. It's okay. I'll put it on. Meth streams. It is a clutch site. I'm telling you, especially for NFL and college football. It's the move. It is the move. Sketchy streaming sites to watch free movies. Onionplay.com is one my brother found that one for me. That's one of a site you can watch a lot of movies for free. Onionplay. It's like these like random names, but they work, right? I'm cheap. I don't want to pay for cable. Also, like, here's the thing. I'm literally only going to watch like 3 sports games a week. Like, I don't want to pay whatever I'm going to have to pay for everything else. I don't want any of that stuff. I just want like my 3 games that I'm going to watch. So it's like, it just doesn't make sense for me to pay for a whole like package or whatever deal, or even I guess YouTube TV, but it's like YouTube TV is like $65 a month or something like that. And then it's like an additional 10 to 15 for the sports package to get any sport channel. It's like, well, okay, can I just pay the 15 for the sports package and no other channels? I don't want the other channels. I just want the like 5-6 sports channels, right? But it doesn't work like that. It seems like on all these sites. Maybe there is one out there, but meth streams. I'm telling you, it works. Check it out. Maybe that's not good though. Maybe if too many people find it, then it's not going to work, or they'll shut it down. But that's how this stuff kind of goes. You have to kind of every year, like you kind of got to check back in, and some of these sites get shut down, so you got to kind of look for them again and find them. and that's kind of how it is. So I think last year it was crack streams, and now it's meth streams. So it's like the same stuff, but they just changed the name, I guess, or whatever, to avoid getting shut down, or to kind of, work around that, I guess. Cut cable over here too. Yeah, I mean, yeah, that's what I think. I mean, I don't. When I go home to like my parents' house or something like that, like, okay, sure, like, they got whatever, because they they watch some shows or whatever, TV, fine. But for me, I'm watching like stuff on either YouTube if I want to watch stuff entertainment wise, or whatever, social media, if I'm watching anything there anyway. So the internet is enough. All right, 10 minutes to go until close. What do we got? Anything that's making SPY's trying to pull back. We went up to 388.50. Little pullback right now. That's not bad. It's just kind of doing its thing. First day in the small count today was a win. I played, actually, believe it or not, IWM puts, but it was this morning. It was actually puts as we were pushing up this morning up in here, I believe. This is a SPY, but it was as SPY was pushing up into here. Maybe it was here. I forget exactly where it was. And then it pulled back to VWAP. That was where I played the puts, and it worked. So it was a nice little play, and it was a pretty clean trade. I mean, in terms of where I got in my risk levels, it was a pretty clean trade, and I played essentially at the money options. So I played options that were worth like $2.50, and I sold them at like, or $2.30, and sold them at like $2.45, $2.50. So nothing crazy in terms of gains, but like I just want something like that that's going to hold its value better. I played 2+ day, or I think I played Wednesday expiration, so it wasn't like this same day. So we had less decay in there as well. So every one streaming site gets taken down, 5 pop up. Yeah. Yeah. Yeah, I'm sure they're all very similar. But yeah, it's a little life hack there, I guess. Let's see if XBI is actually pushed up to almost 83, then it came back down. So it almost filled the gap, and then it got rejected there today. But the 10-year didn't really do anything. It just kind of, it popped at 2.5 this morning, hit a new high highest level since 2011, and then it just pulled right back below that 3.5, and then pull back below at 3.5 right now. Put call ratios today, they went down. This put call ratio went down a good bit off of where it was on Friday, at least where it peaked. It's right kind of in here. It was ranging from essentially 1 to 0.88, which is still high. 0.7 is the average, generally speaking. So yeah, it's still above average in terms of the put call ratio, which means more puts are being bought than average. But yeah, the biggest takeaway I think that we'll talk about more though as we go forward is this. I was seeing some stats too. I'll see if I can find some of these things and bring them up maybe in the video or something like that in the future to put them all together more cleanly, but more concise. But I think we're up to one of the past like 2 decades. We're up there in terms of one of the highest, like in terms of people expecting a recession or the risk. I forget how they classify this chart, but like everyone's expecting a recession next year. Like everyone's expecting it to happen, right? If we're not already there. So it's kind of funny, not funny, but it's kind of, crazy at how the expectation or how everyone is seeing it coming, right? Everyone. So that's just a whole other animal to this environment. I think that we're in that. I think not enough people are taking that seriously and think that like, okay, like it's easy, just do this, whatever, blah, 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 this is going to happen. And we're going to go down to this. Talk to people who've got many, many years of experience as well, who have said, oh no, S&P is going to go below 3, or SPY is going to go below 350. S&P will go below 3,500 this year. And that'll be the better buy. What if it doesn't happen? I mean, people have such confidence now. What if it doesn't happen? Like, that's my question. What happens if it doesn't happen? And are you going to buy if we broke this downtrend and start to push up? Like, do you buy it here? Or do you still think we're going to get better downside next year or 2024? So it's a dynamic environment for sure. I think that's why in the next like couple of years, it might be just more of that like traders environment where it's like you go through these short-lived, down draws or these short-lived 6 months to a year time frame, markets where it's like bear market, then we have a bull market, or we rally back and bounce back, and then it's like kind of just chopping around for a while. I wouldn't be surprised if that's the case for the next couple of years, especially if this inflation is stickier than we want it to be. And if the Fed somehow isn't going to blast us, into recession with this policy, if they don't, which is possible, well, we don't know until next year, we really won't. You can make assumptions or make expectations or make, your own projections or make your own educated guesses saying that, hey, this is the fastest, or they're raising rates so fast into an already weak economy. This is going to crash the economy, right? Next year, we're going to be into a deep recession, and they're going to be, over tightening. We're going to have deflation. We're going to have market crash. We're going to, you could bet. Again, that's just speculation for now. So we're at that point where I think that you got a lot of that shit going back and forth. A lot of people are going to be very surprised with moves. So what I say is don't be surprised by anything. Don't sit there and say, we must go down, we must go up. Whatever is going to happen is going to happen. You can play off of what you think is going to happen based off X, Y, and Z, but don't be surprised if the opposite occurs, because I think we're in this really interesting, just really weird environment. I don't know if PDT applies. I don't believe it does to crypto. I don't think it does. I would confirm with it depends on the broker. I don't think it does apply to crypto. High sophisticated hackers out there giving amazing things away for free. Tesla, look at Tesla, by the way, too. This is a stock that if you were looking, again, it's a risk, but look at this chart. If you can hold above like 300 on Tesla, this is looking like it wants to make a quick run to that 325, 330 area. Very quick run to that level. Now, problem. In hindsight, they're going to say, or whoever, or we could even say, one of us could say that, it was so obvious, right? It was the third, fourth test of that level in the past couple of months. No wonder it broke out and it went for a massive move. Why didn't you buy calls? You got this Fed hike on Wednesday that if I had to guess, bullish, bearish, if someone said you must buy a SPY call or put right now, I would buy SPY calls. I would. That's just me. But based on this, based on that event, that could be, a make or break for an upside or downside move, right? And what if they do a 100 basis point hike? You're probably going to go down. So, and you're buying at resistance. So, it's not as obvious of a trade as you think. And that's just kind of how things tend to play out sometimes, right? So if you're fast and you're playing just shares, you can jump in right away. If you're playing options, different story, because then you're going to be, I guess the Fed meeting on Wednesday is midday. So it's not going to be anything that really happens. It's not like CPI. CPI comes out, an hour before market opens. And like we saw on Tuesday of last week, the bulk of that move all occurred prior to open. The bulk of that move, or at least a very, very big chunk of that move occurred prior to open. So a lot of that move gets priced in right away. But that Tesla breakout looks pretty darn juicy, if you ask me. So if we have another green day tomorrow, I don't necessarily dislike it. And if it pops to like 320, tomorrow, I wouldn't want to hold that into Wednesday. You got a fat chunk of that move already. Let's just leave it alone. Let it do it. Let whatever happened Wednesday happen. But yeah. I don't trade futures or crypto. So I don't know what's best necessarily. I'm not the best one to ask. I mostly just trade stocks. But I would say as a beginner, you probably could get it with small size. I would say you can probably do decent with crypto, just trading small size on crypto. But I'm not sure how the fees go. You got to get a good broker for that too. So I don't know. Mike out of TQ Cube is for profit. Don't like as we Fully green. I would say going if we get another rally tomorrow, or again if you're up nicely today and you just want to take the gains because you don't know what the heck's going to happen, because again no one knows what's going to happen, right? You can have your speculations, right, but no one knows what's going to happen realistically. It wouldn't be a bad idea to take the gains. I wouldn't, why not? Best way to get an edge is hack a hedge fund. Hack Citadel for their data and algos. Yeah. Let's check in on small cap land. What happened today? Any big movers? That's kind of nasty. There was earlier. Yeah, this one. BCAN. What the hell happened here? Just was a spiker in the morning and then just got given all of it back. Jeez. Talk about getting bagged. For those who played this thing, if you bought this today, you got bagged hard, like destructed. I just absolutely crushed on that. All right, SPY closed up. So what do we finish that today? SPY finishes at just about 0.75% in the green. So pretty much filled the gap from that Thursday into Friday move down. Filled the gap back down. Well, started the day off, gapped down. This is one of those days where it's like, I wouldn't necessarily scratch. I'm not saying scratch my head, but when people are like trying to figure out the moves and they're trying to like think too hard into some of these things, what did you have? You had a pretty strong close on Friday. You gave it all back. You gapped down today in terms of where we closed Friday afternoon to where we opened this morning, right? Came down, tested Friday's lows on SPY, held those lows, and then had a massive rally from those lows to the highs and closed at the high of the day. So with that said, SPY closed up 0.77, almost back to that 390 level. IWM here 180.51. TLT is at 107. Again, the 10-year is still just chilling, so we're not really getting to anything too crazy yet. QQQ 291 on the Qs, pushing up in the after hours pretty hard. Look at that. What the heck's going on? Something seemingly is just ripping. Is this even just an error, or we got an actual move here? Qs are just going straight up in the after hours. Let's see. SPY is ripping too in the after hours. Something may have happened. Let me see if I can find any news. I got a news stream, but I haven't seen anything come through yet. Let's see if I can find anything. On Twitter, at least, SPY, unless there's kind of a continuation move off of this close, kind of a further squeeze out, right? I don't see anything. No, I don't know. That's kind of weird. Kind of a crazy move there. But again, is it crazy? I don't really think it's crazy. Again, the put call ratio is so skewed. This is when based off the put call ratio, if you just trade based off of that, you're doing pretty well. You can do a nice job. You've been able to do a decent job this year. Alrighty. With that said, I'm going to wrap things up here, guys. We had a nice little afternoon. It was a pretty chill day. I don't expect too much until Wednesday, so we won't do a stream tomorrow. We'll do a stream Wednesday, so stay tuned for Wednesday. We'll do a stream, and it will be a pretty long one because we'll have Powell's speech, his Q&A session after the Fed raises rates here, most likely at a 75. That's the current projections, but there's still an 18% chance that we get a 100 basis point hike, so don't throw it out the window yet until it's done. But no real volume. Let's see the volume. And this is what we've seen too, again, on these big moves up. You're not going to get it. I don't think, again, on volume, it's not as much as Friday. Let's just take a look at the one day. No, volume was low, very, very low. It was the lowest volume we've seen since you had to go back to like late August. And it was down to, today was one of the lower volume days we've seen over the past year, really. Past 6 to 8 months, which kind of tells me you kind of have that slow kind of grinding up squeeze almost, right? Squeezing kind of out. You're not going to, I don't think you're going to get much volume until people are really kind of clued in or really dialed into what this Fed's going to do and a potential pause or whatever, right? So I think that and just like that move that we saw from June into August was on declining volume, I think that's going to be these uptrends, right? If we get uptrends, that's the move. And then what happens will be either the Fed says something or CPI comes down drastically, or there's some bigger signs, and that's what's going to send some volume back in. There's a lot of money on the sidelines. There's a lot of people in short. That will send the volume back in, but I'm not expecting much volume really. Even on updates, I don't think we're going to, again, it's going to be fairly low volume on these updates, because it makes sense. Why? Because people are still scared to buy the dip. People don't want to buy the dip, and everyone's in puts. Everyone that wants to be is in puts. So people are betting on the downside. So if I'm betting on the downside, I think we're going to go lower. I'll buy my little put, and then I'll just, I'm not going to trade. I'm not going to buy anything, because why? It's going to go lower. I'm going to buy it lower in, 6 months anyway. I'll get a better deal. And then the question is, now, if they do, great. Maybe you do get a better deal in 6 months. Awesome. What happens if you don't? And does that mean that those same people who are holding out now, funds, big money, retail guys, I don't know, are they the ones that are going to be FOMOing back in as if SPY gets up into here in 3 months, and starts to push higher? So that's kind of how I view the volume situation. Again, I don't know. Are we going to go here? I have no idea. Are we going to go here? I have no idea. No one knows, right? You can speculate all you want. No one knows, but with legitimate certainty. So I'm not expecting that volume until there's more certainty in the market anyway. With that said, though, we shall see. You guys are going wild here. Jeez. All right. With that said, I'm going to wrap things up. I'll see you guys Wednesday. That's the plan. Wednesday, we'll do a video, and stay tuned. We'll stay tuned for the release. It won't be I don't think it's going to be a big deal, but we'll get the Discord going at some point soon, so we can kind of hang out in there and throw some ideas around, and after hours and all that good stuff, or really whenever we want, weekends, mornings, anytime. So get the conversation flowing there at some point soon. So stay tuned for that. But thanks so much, guys, for watching. Thumbs up button on the way out. I will see you Wednesday for a stream, and have a great rest of your evening. Peace.